Boom shakalaka. Today's video, we are talking about Michael Saylor's dirty little Bitcoin secret, why most of you are investing in Bitcoin the wrong way, and how you can implement this little secret to become one of the wealthiest Bitcoin investors in the world. You'll want to stay tuned. What's up everyone, Randall here from Crypto Love. Today's video, we are talking about Michael Saylor's dirty little Bitcoin secret. We're also going to take a look at the Bitcoin charts today. But before we do, guys, make sure to like, subscribe, click the notification bell. Join us over on Twitter at the Crypto Love. And today's video is sponsored by Yield App. So make sure you stay tuned till the end for a mini review. Now, I was watching this video here. Raoul Pal, When to Get Out of Bitcoin, Michael Saylor, Exit Strategy for Bitcoin and Bitcoin Prediction by Jamie Tree. I highly recommend you go and watch the video and also subscribe to his channel. Well, watching this video, Michael Saylor shared a strategy that the richest people use to invest in assets. And this one strategy has such an insane difference from what everybody else is doing with Bitcoin today. So I want to share that with you. But before we get into that, let's take a look at where Bitcoin is today. Right now, Bitcoin has bounced off of the 4-hour MA200 exactly as predicted. And right now it's kind of getting squished between the 4-hour MA50 and the 4-hour MA200, this blue and orange line. Now it also bounced off of the 50 fib level and the middle, this dotted white line of the bullish megaphone. Exactly as predicted, Bitcoin bounced off of here. Now, where Bitcoin will go? Well, if it can break above the 4-hour MA50, we're going to be looking for some pretty serious price gains. However, we do have basically a wedge forming of the 4-hour MA50 and the 4-hour MA200, a death cross. So we'll kind of have to see what happens with Bitcoin over the next few days. Now, if we take a look, one of my favorite traders on TradingView, Trading Shot, he says that we're actually repeating the same exact pattern on the underlying channel up. So as you can see here, he has a little bit of a different channel. This isn't the bullish megaphone, but this is a different channel he's showing here. These are 4-hour candles on Bitstamp, but you can see Bitcoin bounces twice off of the MA50 and then dives underneath it and finds that support base where it bounced off of twice and then takes off. Well, the same thing happened here. Bounced once, bounced twice off of the MA50, and then dives underneath the MA50 and finds support on that support base and takes the price up. At the same time, there are both higher lows in the RSI. So it looks like Bitcoin could be repeating its January pattern. However, historically, March is a bad month for Bitcoin. There's only ever been one positive March in Bitcoin's history. So we'll have to see if Bitcoin rewrites history again this year. And also we have to take a look when looking at Bitcoin on a longer time scale. This is the BLX, the Brave New Coin Liquid Index for Bitcoin. Well, these are weekly candles here, and this green is what we are doing right now. The blue is last halving, the yellow is the first halving, and as you can see, this dotted pink line right here is pretty strong resistance for both of the previous halvings. But this teeny little pinpoint white line right here is a trend we've been following since about the middle of October, beginning the middle of October, and as you can see, we are coming up right against that. So we may just end up bouncing off that and continuing up, which could put us towards the upper end, basically $275,000 by about September, October of this year. So interesting times for Bitcoin. Now, Michael Saylor's dirty little secret. This is really important, okay? Because he's not the first person to come up with this. Bill Gates has used this strategy. Jeff Bezos has used this strategy. Warren Buffett has used a strategy. Robert Kiyosaki has used a strategy. Basically, every rich person that I have read about has used this exact strategy, and he just shares it here in this video. So, the first thing that rich people do is they buy assets. So guess what? If you're in cryptocurrency, you're acting like a rich person. You're buying assets. But he has a dirty little secret that a lot of you are not doing, because you're buying Bitcoin, you're buying Ethereum, you're buying Litecoin, you're trading Litecoin for Cardano, you're trading Cardano for Chainlink. You're trading Chainlink for this. And every single trade is a taxable event. That means every single trade, you have to pay 30% of your gains. Well, here's his dirty little secret strategy. Saylor's strategy. Number one, he finds scarce, desirable, and unimpaired assets. Okay? Bitcoin is scarce. It's the scarcest asset that's ever been found. That's it. It's more scarce than gold. Okay? If everybody were to start mining gold, we would find more gold. If everybody were to start mining Bitcoin, still only ever 21 million Bitcoin. Second, it's desirable. Guys, this is the internet of money. Everybody's realizing they're late to the game. This is the Facebook of money. And soon your parents, your grandparents, all of them are going to be into it. And third is unimpaired. Currently it's unimpaired, especially now that it's been added to the books of companies like Microstrategies, of Tesla. Governments aren't going to want to shut that down because that is big industry. So, scarce, desirable, unimpaired. Second, hold it for a long time frame. Guys, all the institutions that are coming into cryptocurrency right now, they are mega hodlers because they know that once you have a scarce, desirable, and unimpaired asset, all you have to do is sit on it. Look at Warren Buffett and Coca-Cola. All he did was hold that, and it grew because it was a scarce, desirable, and unimpaired asset. It was a valuable company. Third, whenever you need money, you borrow against the assets. Guys, I've been talking about this forever with companies like Celsius in one of the first interviews I did with Alex Mashinsky. He blew my mind with that concept. And fourth, you sell the asset only when it becomes impaired. This is the biggest mistake that everybody is making right now, is they're selling now. Guess who's going to be buying it up? Michael Saylor. All right? Because you don't want to sell this. This is the scarcest, most desirable, most unimpaired asset you can own right now. Every time you sell it, you are losing. And here's why. Because if we take a look at taxes, all right, well, there's different classes of taxes. And I'm not a tax expert, but these are rough percentages of how much you pay. So for income tax, you pay roughly 30%. For short-term capital gains, you pay the same as income taxes, roughly 30%. For long-term capital gains, you only pay 10%. For dividends, you only pay 10%. But if you hodl, if you don't actually sell it, you pay 0%. When you borrow against your crypto assets, you pay 0% on that. That means you pay 0 and you still get to hold on to the scarcest, the most desirable, the most unimpaired assets out there. Now, the strategy works because he's just holding it. He's borrowing money against it at 0%, and then he pays that off. Simple as that. You don't pay taxes when you borrow against your crypto assets, but every time you sell, here's the thing. When you sell cryptocurrencies, it's either first in, first out, or first in, last in, first out. So basically, you either pay the difference in the price from the last crypto you bought to this one. So that would be short-term gains. So you're paying 30% off of a smaller amount, or you're paying 10% off of the first in, last out. So 10% off of a larger difference. So either way, every time you sell, you're paying an immense amount, and especially trading, you're paying an absolutely insane amount. So that being what it is, the best strategy here would be to accumulate as much Bitcoin as you can and hold it for a long time. Guys, remember, 4 years ago, Bitcoin was $20,000. Right now it's $60,000 and everybody's talking about $100,000, $250,000. Guess what's going to happen in another 4 years? $1 million. Another 4 years after that, $10 million. Another 4 years after that, $100 million. Another 4 years after that, $1 billion for one Bitcoin. The scarcest asset ever. If everybody on Earth had to divide up Bitcoin, everybody could only own 0.002 Bitcoin. If you want to be in the Bitcoin elite, the 1% of Bitcoin owners, you only need to own 0.28 Bitcoin. So guys, that is Michael Saylor's dirty little secret. Now, as we mentioned, step 3, borrowing against your assets, and you want to do it in a trustworthy fashion. So as I've talked about before, there's Celsius, but today's video is sponsored by Yield App, and the one thing that makes me trust Yield App is right here. They're partners. Bank to the future. I interviewed Simon Dixon about 3-4 years ago, and you can see that video right here. And then also I'll put a link to the video he just did with Robert Kiyosaki of Rich Dad, Poor Dad. This guy knows what he's doing with Bitcoin and cryptocurrency. And if he's behind Yield App, well, guess what? So am I. So what is Yield App? Well, it's DeFi banking in your pocket, the easiest way to earn interest in crypto. So as we can see right here, very simple, very nice looking interface for everyone to do it. Now, it's a simpler DeFi project, decentralized finance, now accessible to everybody, and you can get started immediately. You're always in control, and you can connect from anywhere with a nice little simple app. Now, basically, with 3 easy steps, you sign up, you top up your funds, and you can earn. So basically what they're doing is they're making the DeFi on-ramp especially simple for everyone. And with that, you can earn a minimum of 12% APY, but you can earn up to 20% through the YLD loyalty and rewards program with no gas fees and daily interest. So you're compounding daily. You can use cash or crypto. So like I said previously, they are making this easy for everyone to get involved. No deposit fees. You can forget about swapping assets and paying fees. You can invest your way, deposit and withdraw 24/7, and you can stay secure. So this is licensed and regulated. It's managed by a team of experienced capital markets, fintech, cybersecurity, and crypto professionals operating under European virtual crypto and custodian licenses. And your funds are insured by their audited security infrastructure. They're protected through the YLD insurance fund. Now, the utility token can actually boost your APY from 12% to 20%. You can earn up to 10% APY on your yield. So if you actually invest in this and hold the yield tokens in there, you can earn even more. Therefore, it makes it super easy for anyone to get involved. You can start earning daily interest with as little as $100. All you need to do is download the app or use the computer interface, and you can get started at yield.app. So guys, thank you to Yield App for sponsoring the episode today. I think on-ramps like these that make it super simple for anyone to get involved in cryptocurrency is going to make it very good for everyone, because guess what? Somebody's going to hear about DeFi. They're going to hear Mark Cuban talking about DeFi, and then they'll be able to find Yield App, and with as little as $100, they'll be able to start earning interest on their cryptocurrency. So guys, that's all for today's video. If you did enjoy it, make sure to like, subscribe, click the notification bell. Also, come join us over on Twitter at @TheCryptoLove, and I will catch you later. Peace.